Welcome to the debate. Usually when we evaluate a company's financial debut, we're looking at steady margins, shifting market conditions, standard Wall Street metrics.
Right. The comforting traditional numbers.
Exactly. But today, to understand the biggest financial news of the decade, you actually have to look back at something much, much smaller. A single corroded nut.
Yeah, a corroded aluminum nut, a sudden fuel leak, and a devastating 33-second flight failure.
Which was the grim reality back in 2008. I mean, we aren't talking about a bad fiscal quarter here. We're talking about a nightmare scenario. A founder waking up in cold sweats, sinking his last $35 million into a dream that was, well, literally blowing up on a launch pad in the Pacific Ocean.
And it was a desperate fight for survival, just trying to make payroll for one more month.
Yeah, but that crucible laid the foundation for an absolute empire, because fast forward to April 1st, 2026, and the world gets a massive shockwave. SpaceX files a confidential IPO with the SEC.
Which is just a monumental event.
Oh, absolutely. The target, raising a world record $75 billion. To put that scale into perspective, that is more than double the previous all-time world record set by Saudi Aramco in 2019.
Right.
We are looking at a proposed valuation of between $1.75 and $2 trillion. So I'll be arguing that this $2 trillion valuation is a fundamentally justified reflection of SpaceX's operational monopoly, their tech achievements, and their robust revenue generation.
And, well, I argue that despite the undeniable engineering marvels, trading at 130 times sales on unaudited private numbers while carrying immense political risk makes this a highly precarious financial proposition.
Okay, let me lay out why this valuation isn't just, speculative hype. It's grounded in unprecedented hardware and absolute market dominance. SpaceX currently launches more rockets than the rest of the world combined.
Their launch cadence is, it's definitely unmatched.
Right? I mean, trace their empirical track record of defying the impossible. In 2015, they executed the first safe landing of a used first stage. By 2017, they took that same used rocket and launched it again. And they scaled that to an operational tempo of over 138 successful launches in 2024 alone. And the underlying financials actually support this momentum. We're talking 2025 revenue of $15 to $16 billion with an impressive EBITDA YANR operating profit of $8 billion. It proves this is a highly profitable enterprise, leading a new era, not just some research project.
Look, I certainly don't dispute the engineering success. But we have to draw a strict, unforgiving line between operational achievements and financial reality. When you look at the alarming math here, a $2 trillion valuation means investors are buying in at 130 times sales.
You think the multiple is completely detached?
I mean, it's priced for absolute perfection. That ratio is higher than literally any S&P 500 company on the market today, save for maybe Palantir. It signals a stock that will be historically expensive on day one. Plus, we have massive structural blind spots.
Because it's still private.
Exactly. SpaceX is a private company with no public audit. The market is relying entirely on self-reported numbers. And furthermore, there is severe vulnerability tied to Elon Musk's political views and government involvement. That could completely jeopardize the vital NASA contracts that form the company's foundation.
I see why you think that, but let's look at the physical realities being used to justify that 130x multiple. Because the core of this valuation is their reusability, which functions as a massive economic moat.
How so? Walk me through the unit economics there.
Okay, take the specific example of the Falcon booster known as B-1067. This single piece of hardware has launched and landed 32 times.
Wow, 32 times?
Yeah, sometimes with a turnaround time of just 3 weeks. So they aren't building a new rocket every time they want to go to space. They're operating a delivery truck route to orbit. That shifts them from being an aerospace manufacturer to a logistics monopoly. The multiple reflects the fact that they've permanently broken the traditional unit economics of spaceflight.
That's a compelling argument. And, B-1067 is an engineering marvel. Turning a rocket around in 3 weeks is phenomenal. But even a logistics monopoly still has to answer to traditional market gravity.
What do you mean by market gravity?
I mean, a 130 times sales multiple requires flawless execution into perpetuity. It prices in zero margin for error. If something goes wrong, say a systemic flaw forces the FAA to ground the fleet for a year, the fall is going to be catastrophic. You're pricing the stock as if the next 50 years of spaceflight will happen without a single structural failure.
But wait, isn't applying traditional S&P 500 metrics to SpaceX like evaluating the early internet based on postage stamp sales?
I'm not sure I follow the comparison.
Well, if you valued the internet in 1995 based on how it affected the Postal Service, you'd fundamentally misunderstand what it was. We're talking about the infrastructure for a multi-planetary economy. When you own the sole viable railway to orbit, aren't you inherently resistant to traditional market comparisons?
I'm sorry, I just don't buy that. Whenever the financial market decides that this time is different and invents a new framework to justify unprecedented multiples, it almost always ends poorly for the retail investor. Gravity is gravity.
Okay, but let's talk about the broader ecosystem then, because it's not just rocket hardware. The expansive growth vectors here are wild. Look at Starlink.
The satellite internet side.
Exactly. 7 to 8 million users, rolling out direct-to-cell capabilities. That's internet anywhere on the globe. And then consider the strategic February 2026 acquisition of Musk's AI company, xAI.
Right, the merger.
Yeah, a merger that valued SpaceX at $1 trillion and xAI at $250 billion at the time. By integrating AI into their space infrastructure, SpaceX proves it's an integrated tech behemoth. It's not just a launch provider anymore.
See, when you blend satellite hardware with artificial intelligence under one roof without a public audit, I see an incredibly complex web. Retail investors are reportedly going to access this IPO through E-Trade, under Morgan Stanley, right?
Yes, that's the reported retail portal.
So everyday investors are being asked to evaluate a merged entity of rockets and AI without a comprehensive independent public audit. Aren't investors just buying an expensive black box based entirely on the founder's word?
I wouldn't call it a black box. The numbers we do have, the 15 to 16 billion in revenue and 8 billion in operating profit, those are tangible results. Starlink has millions of real subscribers paying real fees.
But they're self-reported figures. When you're a private entity, you have immense leeway in how you classify costs. How much of that 8 billion EBITDA is just aggressive capitalization of private R&D for xAI? Without an independent audit, we simply do not know.
Well, the transparency is precisely what the IPO process is initiating, but the market is willing to pay the visionary premium right now because the vision is actually materializing.
The visionary premium is a double-edged sword, though.
Make humanity multiplanetary. You're investing in the resilience of a man who invested his last $35 million when he was on the verge of losing everything. That resilience justifies the premium.
I completely acknowledge the extraordinary journey from that first Falcon 1 explosion to a $2 trillion empire. But as an investor evaluating risk, you have to recognize that the key man is also their biggest liability.
Because of his political views?
Yes! His increasingly prominent political views and entanglements with the government could directly threaten future NASA contracts. Government contracts are the foundation of this company. If the leadership's actions alienate the federal government, those vital contracts are jeopardized.
But are government contracts truly an existential risk anymore when the government literally has no alternative? I mean, SpaceX launches more rockets than the rest of the world combined.
The government always has leverage.
Do they? If you are NASA, you simply do not have a viable, cost-effective alternative. You can't take your payloads to legacy providers who cost 10 times as much and launch once a year. The power dynamic has completely flipped.
To assume a sovereign entity lacks leverage is incredibly dangerous. Yes, they operate a monopoly now, but government funding is subject to political winds. If an administration decides the key man risk is too high, they can absolutely pivot funding to stimulate competitors. You cannot outleverage the entity that writes the rules. The FAA granting launch licenses, the FCC controlling spectrum for Starlink.
I hear you, but ultimately, to summarize my position, this IPO, while expensive by legacy metrics, is a singular opportunity. You're investing in a proven monopoly that turns sci-fi concepts like reusable rockets and multiplanetary life into $8 billion in operating profits.
And to summarize my stance, while the journey from 2008 to 2026 is an undeniable triumph, the unaudited books, the historic 130 times sales multiple, and the looming political risks to vital contracts require extreme caution for any retail investor.
While regardless of whether one agrees or disagrees with the financials or with Musk himself, I think we both converge on the fact that this journey from a single corroded nut and 3 burned rockets to the largest IPO filing in human history is, well, it's extraordinary.
Oh, absolutely. It is an impossible dream being listed publicly. The sheer scale of what has been built is magnificent.
It really is. So, we leave you, the listener, to reflect on the sheer magnitude of the moment and determine if the financial risks outweigh the promise of a multi-planetary future.